Simple can be harder than complex. You have to work hard to get your thinking clean to make it simple, but it's worth it in the end because once you get there, you can move mountains. Steve Jobs, he was the master of simplicity, and what beautiful designs and ideas he came up with. And of course, to master the markets for what we do, we want to keep our decision making simple, applying Occam's razor that the simple, most efficient way is always the least prone to error. And as Einstein said, make things as simple as possible, but not simpler. So let's jump into these charts with our simple method that again helps us see what is really going on. Now, the first thing we're going to jump into, as we always do, is the S&P 500. We see stocks and bonds are down for the day, not a whole lot, but gold and Bitcoin are a-booming. Let's first jump into the S&P 500. We can see again where it's just pretty much sliding along. It did top a little bit higher, I believe. Let's check out where the high was for the week so far, 514.20. We look at last week, 513.29. So yes, about $1.09 higher. And oh no, not $1.09. That was 513.29 and 514.20. So a little less than $1 higher by 9 cents. So as we look at where things are ranging, ended the day down 0.11%. But again, things have just continued to click up, up, and up. Not a lot of volume here starting the week off. And again, we've been below average volume the last, well, really 3 weeks because we didn't quite hit it even back on the week beginning the 12th of February and the week before the 5th. Last time we got above average volume was all the way back on the week beginning the 29th of January. So that's where we are. As far as the S&P starting the week off slow, we can see price still is above the 2-day on the weekly trend line, and on the half day it's above the weekly trend line. Also, we look at the NASDAQ 100 down a little more than the S&P 0.36%. We can see where things popped up in the morning, pulling back in the afternoon. Did we hit a higher high? The high so far this week, 446 so far. So far, 446.58. So not hitting the high of last week yet, off by, about 50 cents or so. So again, as we watch the week starting off slowly, not a lot of volume, we'll continue to keep our eye on stocks and see when they do hit their zenith. When's that going to be? How long is it going to take? I don't know. This is the market that just once things started moving up as we got into the end of October, beginning of November, they popped up strong till at the beginning of the year, slowing down and then taking off again mid-January and just a booming. Now let's move from stocks to 20-year U.S. government bonds. Where are they? Starting the week off weak, as they did last week. As we look at the 2-day chart, we can see where things bottomed out on that 2-day chart, the Wednesday, Thursday, 21st and 22nd of February. Since then, they've been trying to poke along, moving up. Starting the week off, though, down 0.40% as we look at the half-day chart. Again, we don't have much of a trend line of any kind here. We can see where we have broken through the downtrend, but there's no way to draw anything but a flat trend line there that doesn't do anything for anyone at this point. So we'll just continue to keep our eye on bonds and see when they do straighten themselves out which way they are going to go. And if indeed this down move is over, can't tell really anything right now. Not enough volume here to tell us much of anything. Last time we had volume peak up was when things shot up and tried to move up and then died back on the week starting the 29th of January, then down for 3 weeks. And of course, these last 2 weeks are sort of struggling along sideways. So waiting for bonds to sort themselves out. Now gold is a different matter. Gold popped down, but again, no high-ranging volume here where it found its bottom. And then, of course, gold turned around and started moving up after sort of faking us out here, touching what had been really the ceiling on gold. Another time, it has multiple times all the way back to May of last year, and then pushed through it last week. Again, candle itself didn't, but the wick did, and pushed higher than it had before. And then, of course, this week, just booming up on Monday, 1.62%. Look at the volume for just one day. Look at how things, again, on this Monday 2-day candle, just blasting through what had been our ceiling before. Of course, that move started on Friday morning, Friday afternoon, Monday morning, and again, not quite as high in the afternoon as it had been in the morning, but ended the day up 1.62%. So gold is a booming. Now, I told you to keep an eye too on GDX. Where are the gold miners? Well, you can see gold miners had been moving down, down, down. I told you to watch as we had higher than average volume with this red spinning top. What would it be like? And of course, we started this week off blasting through. You can see where things really started blasting up on Thursday, then on Friday, and then, of course, on Monday. So again, starting the week off strong for gold miners, as one would expect when gold finally found its footing. I was just telling you to keep an eye on that because we saw just how trounced those gold miners had gotten. And as gold started to bottom out, as we saw there with all that volume, wondered what would be next. And of course, we had an idea. Now, let's look at Bitcoin. Oh my gosh. HODL. This is the VanEck Bitcoin Trust. It is an ETF. And of course, look at it just this week. Look at the candle up 7.40% on Monday. Just a booming up in the morning, a little further up in the afternoon. And of course, the only thing on this chart we have with any volume is here on the half day, the 195-minute chart. We should be getting volume soon once we get 20 candles on the 2-day. It'll be longer with the weekly because, again, these are the average volume is on 20 periods. So it'll be 20 weeks and, of course, 40 days or 22-day candles. And, of course, we've already got it on the half day. So what are we doing? We're supplementing with the 24-hour-a-day Bitcoin chart. And, of course, what do we see here? It's a booming up right now, up 6.91%. You can see where Bitcoin started tracking up on Sunday morning early and then just building into a crescendo throughout the day on Sunday, on up throughout the day on Monday as things just hammered up. Again, looking quite beautiful for Bitcoin. Again, growing to a high of $68,058. Now, just the beginning of February, end of January, we were at the $40,000 mark, just above that, all the way up to $68,058. Just amazing as Bitcoin booms. So that is where we are as we end the day on Monday. Gold, Bitcoin surging, stocks struggling, along with 20-year U.S. government bonds. That is where we are. Market is always exciting, never lacks for something going on that is interesting, even on the days when it's not doing a lot. It is always telling you with price and volume some of its secrets. That's what we teach here. That's what we learn about. I want you to practice trade with us and learn how to read these charts. We love to hear from you. CW@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.